Hey everyone, welcome back to Corporate Decoder. Ever wondered what secrets lie hidden in those long, boring corporate reports? Well, today we're diving into one, so buckle up because this might get a little distributing. Okay, bad pun, but seriously, we're looking at AMCON Distributing Company's latest financial report, and there's some interesting stuff going on beneath the surface. This is their report for the period ending March 31st of this year. AMCON is a big player in wholesale distribution. Basically, they get a huge range of consumer products like cigarettes, candy, drinks, even health and beauty stuff to smaller stores. They also have retail health food stores in the Midwest and Florida. So let's decode what this report is telling us about how they're doing. Right off the bat, you can see the usual stuff, balance sheets, income statements, and all those fun financial details. It's like a corporate treasure map if the treasure was slightly less exciting. But don't worry, we're going to try and make it interesting. First up, let's glance at the balance sheet. Their accounts receivable, the money owed to them, is around 65 million. Last year it was about 70 million, so they are collecting less money on their invoices. It's not a huge difference, but we'll want to check on that later. They're holding about 160 million in inventory this year compared to 44 million last year. This could be an issue as that inventory has to be stored and managed, all while it could become obsolete if not sold. So that is money sitting there unused and it may become worthless. Now let's get to their income statement. This shows how much money they made or lost over the last few months. Sales for the quarter were up about 619 million versus 601 million last year. This is good news, meaning they're selling more stuff, but that's just one piece of the puzzle. Their gross profit, which is how much money they make after subtracting the direct cost of what they sell, was also up a tiny bit, about 700,000 higher. However, their selling, general and administrative expenses, which are the costs of running their company, jumped nearly 4 million. This makes it so their operating income, their profit before interest and taxes, really tanked. It went from a profit of over 3 million to a profit of only about 460,000. That's why their income taxes are benefiting the company this quarter, because their lack of profits qualifies them for tax credits. This is all very, very bad for them overall though, as profits are of course better than tax credits. All that resulted in basic earnings per share that were negative 2.58 compared to 0.9L of earnings the previous year. That means they lost money for each share in the company. This is all very bad trend for AMCON at a glance. Let's see how they are actually doing in cash flow if we scroll down to their statements of cash flows. Their net loss was over 1 million this period versus net income of over 1.6 million the previous year. Let's see how their cash flows are looking. Their cash flow from operations went from positive 53 million to negative 54 million. Seems like they spent a lot of money potentially on inventory, as we saw earlier. They spent 6 million on property and equipment, so that could also be another contributing factor, but not nearly enough to offset that large amount of cash that just completely went the other way. They borrowed over 1.2 billion and paid it back, so this seems like a lot of short-term churning of debt. Let's keep on reading. However, their financing activities provided a positive 17.9 million for the company, so it balanced out cash flow issues. This is generally not a good sign. AMCON serves customers in 34 states, that's a wide reach, but also a lot of ground to cover, potentially increasing their costs. They operate in two segments, wholesale and retail. The company is in the process of accounting for several new financial standards for transparency in accounting. These can have a significant impact in AMCON as they rely on small retailers to act as their customers. They acquired a company called Rock Supply for about $6.1 million and is expecting benefits to come from it. From the acquisition through March, the acquisition has brought in only 5.6 million in revenue and actually lost money, around 64,000 in net loss. While this does not look immediately promising, it's too early to tell if Rock acquisition was the right move to scroll revenue. Net loss growth, if we look at the theoretical income statement numbers as if they owned all their acquisitions since last year, their revenue would be 1.33 billion and losses would be 1.33 million. So it sounds like AMCON might actually be losing money overall due to their acquisitions, or perhaps they have difficulties consolidating their businesses. Their inventory process also seems problematic. So that is another big problem to keep an eye on that may turn into a problem in the future. If we scroll down to their goodwill, which is an estimation of the value they paid, and how that value will turn into profits, it was around 5.8 million. This is also something to look out for in future financial reports. If these values start to look impaired, that means their acquisitions are not looking good. They did pay dividends this quarter, so they seem to have at least some hope about their ability to generate future revenue. They aren't too worried about the short term, so perhaps something will shift later. We looked at this previously when we talked about the statements of income. These are the same metrics that are calculated on each of the share of stock. It shows the losses AMCON has been racking up, which again is not good. AMCON has 3 major credit facilities, which are basically fancy words for lines of credit. They have a bunch of assets like equipment and inventory that they use as collateral to get those loans. The problem is their borrowing capacity compared to their outstanding loans, leaving them only about 78 million of available credit. Given they had a cash flow of negative 5 million, it does not look like they have too many options going forward. As we mentioned before, the income tax benefits this quarter were positive, so good but actually bad. Their wholesale segment is a revenue of about 607 million, while their retail segment is around 11 million. They have extremely unbalanced operations, so we can see why they need to make more effort in managing inventory and cash. It all comes down to them selling basically cigarettes and other related unhealthy products. If those get regulated, that hurts their business badly. So what's the final verdict on AMCON? Here's what I'm seeing. They have got a big reach with their wholesale network, but they might be struggling to effectively manage costs. The amount of inventory they're holding seems too high, and if the number of sales of cigarettes keeps falling, they could be in a tough spot and need to reevaluate some big things. The biggest risks are definitely those potential regulations and that mountain of debt. However, it can be an opportunity if they can innovate. They need to find new products that people actually want that they can sell and have a good margin on. Otherwise, they may be in for an issue. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, give us a like, drop a comment, and subscribe for more financial deep dives.